Welcome back to Bazaar Morning Call. Well, our research team is standing by and lots of individual stocks in focus. So let's get straight to that. First up, we have UltraTech and India Cements on our radar. Nisha's covering that for us. Nisha, over to you.
What a busy week it has been, weekend it has been for the two companies and for all of us. It's a large transaction that has been finally announced. It was in the waiting when the financial investors gave a huge chunk of the stake to UltraTech for buying India Cements. So now they have confirmed that they are going to acquire, UltraTech is going to acquire India Cements with a majority stake coming in. 55% will be the total stake of UltraTech in India Cements after buying out the promoters as well as associates and with the previous block that they had bought. The total acquisition cost so far is close to about 5,800 crore rupees and an open offer will be triggered, which could take the expense to about 7,000 odd crores, but it depends on the tendering. One important bit I would like to point out here is that Jefferies has said that the blended valuation is at $110 per ton, which is a tad expensive compared to the other M&A done, but looks like it's going to be positive for UltraTech, which is fighting the competition from Adani and consolidating South India position, and India Cements getting a good deal at 390 rupees per share, at which open offer will also be done.
All right, thanks a lot for that, Nisha. Well, let's run you through 6 top points that you need to track with regard to this deal. First, the valuation is roughly around that $108 to $112 per ton, depending on what numbers you are taking. So that's roughly the number. Then, in fact, you have India Cements, where the total debt is around 2,000 crores approximately. But, the debt can come down substantially because they have some non-core assets. There are more than 25,000 acres, as we know. What does UltraTech Cement get? Besides the capacity of 14.5 million tons odd, they get limestone reserves. So that seems to be the key reason that they've gone ahead and bid up, the stock, for this. And India Cement, well, why did they have to sell? Because the debt was high, utilization levels were low, and EBITDA per ton as well was rather low. The stocks you should be tracking, neutral to positive for UltraTech Cement. For India Cement, we'll see whether it hits a near-term peak. Negative reaction for Ramco as well as Dalmia Cement just in the near term, because they are, they have been dominating that market, so that there'll be a bit of risk out there, and there could be a positive rub-off on Orient, Mangalam and Sagar Cement. For the industry on the whole, for the South industry, near term, there could be pricing pressure. In the longer term, it's a step in the right direction. So we'll keep an eye out on all these stocks. But that's about cement. Let's go across to Sudarshan for ICICI Bank. Morning, Sudarshan.
Morning, Nigel. So I'm going with green for ICICI Bank. It's another quarter of healthy set of earnings from ICICI Bank. Talking first about the headline numbers, NI has come in line at rupees 19,553 crore and profit has come in 5% higher than estimate. So what are positives in the result? Gross NPA has come in at a 10-quarter low of 2.15%. NIM has slipped 4 bips sequentially and 42 bips year-on-year, but it's in line at 4.36%. And overall stress in the balance sheet is the lowest in 26 quarters or more. But there are a few negatives as well. Core operating profit growth is lowest in 4 quarters. Slippages have risen 15% sequentially, and ROE is at 17.7%. That is lowest in 16 quarters. But overall, it's a healthy set of earnings and much better than the peers that have reported earnings so far.
All right, so thank you very much for that. So that's ICICI Bank in focus. Now, Dr. Reddy has also reported numbers. Ekta, how do the numbers look? Morning.
Morning. Well, numbers look good. Came out on Saturday afternoon, so it'll be reacting to its conference call details as well. So the revenue was up 14%. Street was estimating around a 7% growth. Margins came in at 28%, which was, rather in line with estimates of around 27%. Profit was also around 1,392 odd crores. North America did well. It was up around 20 odd % year on year. Estimates of around $130 million of contribution from Revlimid generic, which was largely in line. India did well. It was up 15% year on year, but the organic growth was around 7%. And PSAI also did well, which was basically their active ingredients business, which was up around 14%. The company says that they target continued growth in the US through the year, and they're targeting double-digit organic growth in India for the full year as well. And, they have a target of around 25% in terms of margins, which they want to maintain so that the rest goes into capex. So the street, I think, will be happy with the fact that they came above it this quarter.
Okay, thanks a lot for that. Well, Sudarshan is going to also talk about IndusInd Bank and IDFC First Bank. Sudarshan, over to you.
Morning, Sonia. So first, starting with IndusInd Bank, The numbers were weak and were much below estimates. NI has missed estimates by more than 2% and profit has missed estimates by more than 5%. Even operationally, numbers looked weak. Operating profits have declined 3.2% sequentially, and it's the biggest decline in 34 quarters. Asset quality, gross NPA ratio has risen for the first time in 9 quarters. It has come in at 2.02% and margin has come in at a 7-quarter low of 4.25%. Coming to IDFC First Bank, asset quality remains a concern over here as well. Company reports an increase in credit cost as slippages ratio has risen to a 7-quarter high, and also company has increased its credit cost guidance for FY25. In Q1, slippages have risen 23% sequentially to nearly rupees 1,700 crore, and net interest margin has dipped both sequentially and year on year. Headline numbers though have come in line. NI has come at 4,695 crore and profit at rupees 681 crore. So I'm going with red for both IndusInd Bank and IDFC First Bank.
Okay, thanks a lot for that, Sudarshan. Well, let's hop across to Vivek, who's here to tell us about NTPC and Power Grid. Vivek, morning.
Well, good morning. NTPC and Power Grid had differing fortunes as far as Q1 was concerned. NTPC, a strong operational performance by the company, results above what the CNBC poll was indicating. Now, when you're talking about the NTPC numbers themselves, revenues higher by 13.5% on a year-on-year basis, this was against a poll of 42,000 crore. The EBITDA higher by almost 9.5%, and this was against a poll of 11,922. The actual numbers came in close to the 12,470 crore mark. Now, talking about the margins were a slight miss, 40 basis points, but that's something that is free to look ahead. Net profit higher by 11%, profitability coming in at 4,511 crore versus a poll of 4,467 crore. Two key metrics that we are tracking, the thermal PLF, is quite strong over there, 80.39% versus 77.43% on a year-on-year basis. Average tariff also increased, coming in at, increased almost 3.5% on a year-on-year basis, coming in at 4.53 rupees per unit. Now, talking about Power Grid, remember the numbers were a bit of a dampener, a slight miss against our poll, but however, it'll be interesting to see what is the prospects that the company give when, they have the analyst meet later today. So revenues down 1.7% on a year-on-year basis, close to the 10,050 crore mark. EBITDA down 3% on a year-on-year basis. Margin strong, but despite that, profitability down almost 3.7% on a year-on-year basis. Remember, the key numbers to watch out for will be the FY25 capex and the capitalization. Capex earlier they had given a target of over 15,000 crore. That's very strong, and capitalization is likely to double from FY24 levels. Both NTPC and Power Grid have the analyst meet later today, so we'll await granular details from there.
Got it. All right. Thanks a lot for that, Vivek. Well, let's also talk about Interglobe Aviation. The numbers came in post-market hours on Friday, and they look pretty decent, actually. Revenue growth of 17% is what the company has clocked in. The EBITDA has gone up 4%. Now, margins have been slightly under pressure, falling to 26.4% versus 29.8%. That's also because fuel costs have gone up. The profits are down about 12%, but the good part is yields for the company have improved, up 1% year on year, coming in at 5.24 rupees. And if you look at what brokerages have said, right, Jefferies has actually raised the target price on Interglobe Aviation to 4,400 versus 4,150 earlier. And Motilal Oswal has maintained a neutral with a target price of 44.20 on the stock. So I'm going with green on Interglobe Aviation. But BHEL is also in focus this morning. Vamakshi is here to give us details on that. Vamakshi, over to you.
Well, good morning. BHEL is expected to trade higher in the session today, and that is because the company has received a large order. They've received an LOI worth almost 10,000 crores from Damodar Valley Corporation, and this is for setting up two 800 megawatt Kodarma Phase 2 power station in Jharkhand. Now, Antec believes that FY25 has seen a very strong positive start for the company. They've received almost 17,000 crore worth of orders from the power segment, and in fact, they're expecting cumulative order inflow to continue, expecting 1.8 lakh crores over FY24 to 26. This, along with accelerated execution of their existing order book, could lead to better operational performance for the company. They're expecting 156% earnings CAGR over FY24 to 27. They believe that the stock has meaningfully re-rated over the last 1 year, but believe that the stock is still inexpensive and has the potential to re-rate further. They maintain a buy target price of 360 per share. Overall, the order win boding well for BHEL.
Okay, thanks a lot for that. Here's a quick recap of our top stocks. Stocks with positive news flow: UltraTech Cement, India Cements, ICICI Bank, Dr. Reddy's, NTPC, Interglobe Aviation and BHEL, while stocks with negative news flow IndusInd Bank, IDFC First Bank and Power Grid. Let's take a short break. On the other side of the break, Prakash Diwan will join in to discuss some fundamental stock analysis. Do stay tuned in.